Is there any echo, or is it okay? Is there any echo, or is it okay? I can't tell if there's any echo or not. Oh shit.
Is there any echo?
What about now? Is there any echo now? Can you guys even hear me now? You guys. Okay, so you guys can hear me, right? Alright, I'll wait for a minute or two just so people can join. Oh yeah, ignore all the tabs. Managing both college and schools. That's that. Alright, just wait. I'm gonna wait for like another minute or two and then I'll start. Just resume building, reaching out to people on LinkedIn, other stuff for Georgia Tech. Yeah, I really need to clear all of this too. Okay, I'm probably gonna go ahead and get started. Everybody who wants to join, I think, is good. So, alright, so let's go ahead and get started. So first of all, if I cough a lot or I blow my nose a lot, it's because I'm still sick. I am a lot better, but you know, probably be good in a couple of days. Okay, so I go to in person. I go to Georgia Tech in person, but I'm home for the week just because I'm really sick. So I know a lot of people who follow me say that I only like trading breakouts, you know, fits my style, personality, all of that. But now that there are chances that we may head into a range-bound market on both SPY and Qs, you know, breakouts might not be the highest probability trade. That doesn't mean that breakouts will not still be my main style of trading. However, I'm really going to focus a bit on contextual analysis trading. So, flip it off. So if you see Carmine, you'll see Carmine taking high probability trades on both SPY and Qs, um, and they work out a lot. And a lot of them, a lot of it just comes from contextual analysis. So I'm gonna be going over the two contextual analysis plays I took. Both of them were on Qs, so you can really just understand like my thought process. Okay, I'm gonna go to. Is this hard to see? Let me know if like the candles are too small. I can always go to one screen as well. So this is it. Let me know if it's too small. Okay, so none of me. Okay, so I'll go ahead and get started. I'll go to one screen just because it's bigger, more people can see. So in total, I took 3 trades today. I took a trade on Netflix loss minus 160, took a trade on Qs plus 200, and then took another trade on Qs plus 100. So overall, I ended the day up like 160. I did go in with very, very small size with the other two trades just because it's contextual analysis and I'm not really used to it yet. But if you check cues just from a higher time frame, I've been talking about, I personally didn't think it was time to play puts just because every single dip was getting bought up. However, my bias, whatever, it changed after seeing yesterday's action pre-market. So what I mean by this is if you go to like a 5 minute time frame, um, every single time buyers moved lower, let me go to like a 1 hour chart. So every single dip we had for buyers to move lower, I thought it was gonna get bought up because we were still in an uptrend. However, every single move higher was met with sellers. So this action on Friday was the first sign that this may be more than just a corrective pullback. And then pre-market when we were down 300 points, that really validated us being weak, and sellers being priced into the market. Same thing on ES. It's a lot more clear on ES. ES had this major trend line which I had. I removed that trend line just because we officially broke it. ES is down 2.2%. ES is down over 100 points, which is a big deal. So this means that sellers are priced into the market. Okay. Yeah, I have to switch back just to see if there's any questions occasionally, but basically my overall status on the market right now is I'm open to playing both puts and calls just because we're entering a period of range bound. So I talked to another profitable trader yesterday, and he has a very, very good understanding of SPY, and he said, let me go to a blank chart. So he said that on a higher time frame, if you go to a weekly time frame, he said that SPY essentially went parabolic over the last year. So this was a huge move on SPY. So all of us know that SPY and Qs needs to come down eventually. So all of us know that both SPY and Qs need to move down eventually. Nobody, but the real question is when. When is SPY gonna move down, and is the move down gonna be a corrective move, or is it gonna be a actual move? Might not be as aggressive as COVID, but it can definitely be a move like this where SPY moves 400, 500 points towards the downside. Okay, so that's that. Essentially, SPY may drop, and there is a very, very good chance over the next year or two where SPY and Qs are just range bound. Qs sellers or buyers are defending maybe the low at like 4,000, and sellers are defending the highs near 4,500. So we may be stuck in a range. So breakouts may not be the highest probability of a trade. So therefore, in conclusion, I'm open to both puts and calls. So now if we go to my Netflix trade, let me open video. If anybody has any questions while I explain stuff, just go ahead and ask so I can answer them as well. Okay, so the reason I took Netflix long this morning is I saw a couple of things. We had pretty strong pre-market action. Qs was down 300 points while Netflix was only down like 2 or 3 points. So to me that was clear relative strength. On top of that, NQ had this massive lower wick at one point and then got bought up immediately. Same thing with Qs. So Qs or SPY also had this massive dip and then immediately got bought back up. So my thought process was, okay, Netflix has this key level at 590. It showed strength in pre-market. If Qs and SPY get bought up and the sellers who went short are now taking profit, we could move higher. And that is not what happened. I entered whatever 4 contracts here, took a $160 loss, which is fine. You're not going to win every trade. What this is letting me know, based off of this trade, I do not think this was a bad trade. However, we're in a point in the market where we're unsure about puts and calls. So in my opinion, playing the open right now isn't the safest thing to do, just because there's no clarity in the sense of direction, if that makes any sense. outlook on AMD. I'll go over AMD in a second. Contextual analysis is key. How I trade. And Pranav, what you just said, I think that's what I'm going to be switching to now. I'm going to be taking both contextual trades and breakout trades. I'll most likely be taking breakout trades when there is clear direction in either side on the day, and then contextual trades when the action is a little bit harder to read. That doesn't mean that I'm gonna stop trading selective. As I talked about, my win rate in September was closer to 70+%. Risk to reward was also above 1 to 1. So I don't want to give up the selectivity, but I am open to contextual trades, and I will be explaining both contextual trades because I know contextual analysis is very hard to do. It really comes just from the psychology of understanding other people. Okay, so back to Netflix. Definitely not a bad trade. Qs did have fresh supply here. However, this supply was 80, 90 points away. Wasn't too worried about it. I knew that Netflix could at least run to daily supply or this upper trend line. But I did take a loss on Netflix. That is completely fine. I made back all of that money and more. So now I'll be focusing on the two contextual trades I took today. So let's go back to charting. Yeah, give me a second. Okay, somebody asked what's my outlook on AMD. I was actually looking for a short setup on AMD. Essentially, like my thought process on AMD is this higher low formation that we had was officially broken. So I kind of wanted to take the break of this lower trend line. But now that we broke below, we gapped below it. I personally didn't see a clear setup. But if I was to say something on AMD, I would say that AMD is now weak just because it broke below major support. Okay, occasionally just see. Yeah, I'm just replying to some DMs occasionally. Okay. Anyways, back to QQQ and SPY. My bad. NQ. Okay. So the first thing you need to do is you need to understand where all participants are placed in the market. So what I'm doing now is I'm going to be going over the contextual analysis I saw on Q, and then the two plays I also took on Q. Both are winning trades. I took one long, one short. The long wasn't as high probability as a short in my opinion. So if I really am focusing on selectivity, it isn't the best to it really isn't the best to have taken the long setup, but I will go over both. So imagine you have multiple participants in this market. So contextual analysis comes from understanding where other people are placed and understanding the psychology of multiple traders. So imagine you are short. Oh, my bad. Imagine you are short and you get short right here. What happens overnight? You are up 300 points on Q. That is huge. As if you short it all the way up here, your first instinct is to take profit when you are up 300 points in your favor. So yellow represents some theoretical shorts who went short here. So when they are up this much, what are they going to do? They're going to cover. So they cover their position, and when shorts cover their position, they have to buy either equity or long positions because that's how shorts cover their position. It's hard to trade without EMA. My opinion, you don't really need EMA or VWAP. VWAP maybe, but EMA is not really. The reason for that is just because EMAs and VWAP are just other areas of support and resistance. So I can honestly find those areas of support and resistance just by looking at price action. And I'll go and explain what I mean a little bit more into the live stream. Yeah, we don't really like to use indicators. Another reason for that is, again, it goes back to psychology. Only 5% of people are profitable in the markets, just in general. So if 90 or 95% of people use indicators, EMAs, and VWAP, then that's probably the last thing that you want to use. Okay, but anyways, the shorts who went short all the way up here now cover their position, so that causes buying pressure into the markets. On top of this, when you have buyers right here, then most likely retail traders are going to chase above high of day, right? So now you have new long positions in the market. So you have retail traders who chase this move up, and then you have shorts who are covering. So this theoretically will cause a lot of buying momentum, right? So what happens when this area fails? So now we fail to get above the high NQ at 1 hour supply and we reject it. So now when price starts moving lower here, I'll go ahead and change the color so you can see. So when I reference colors, you can see what I mean. So now when we are here, when we are underwater, so underwater as in blue, okay, so now that these retail traders are underwater, what are they going to do when they're down money? They're going to stop out. So when longs stop out, that causes selling pressure into the market. So now that new sellers and the retail who stopped out, there is pretty aggressive selling pressure into the market. Now we breach low of day and we hold low of day. So this right here is very, very important. So now we've breached low of day and we're holding below low of day. And keep in mind that this level right here is 15,000. So this is a very, very critical level. Let me go back. VWAP is good. Yeah, VWAP is good. It's probably the only indicator I'd probably use if I were to start using indicators. Okay, anyways, back to the analysis. So now that sellers have breached the low and are holding the lows, this automatically tells me that we are bearish. You know, the sellers here who didn't take profit here are still in the money. The retail traders who went short here, who went long here, have now stopped out. The new sellers who took it before a low of day are also in profit. Therefore, there is a lot of selling pressure. So at this point, I'm thinking that, okay, now I'm convinced the market is bearish. So now I'm looking for a potential place to enter. So automatically I start thinking about, okay, what are some major areas? What are some key psychological levels? Because I don't want to just blindly enter down here because my risk to reward would be skewed. So automatically I notice this 15,000 level. And why is this level so important? The reason this level is so important is because so many traders look at key psychological levels. So I'm just going to say major psych level. So most likely, because this level is so strong, so many traders look at it, we're not immediately going to give up this level, you know? The reason for that is because even though we are bearish, a lot of buyers are looking to buy 15,000, and this is where my first trade came into play. It was a very, very short. It was a long position. It was for a pretty short amount of time. It wasn't the best trade in my opinion, but I knew 15,000 would be hard to breach. So I pretty much entered as we reclaimed 15,000, and as we failed to get above prior resistance at 15,040, I exited. In my opinion, it wasn't the best trade because I knew the market would be bearish, so it's not good to go counter trade. So in my opinion, I did make money on it, but it definitely is an avoidable trade. But also, I'm learning contextual analysis right now because I really haven't traded with it. So that was my first trade. It was a small winning trade. Okay, so now that buyers reclaimed 15,000, so I'm gonna draw it here. So some smarter traders like myself are going to enter right here, 15,000 here. So you have to think about where traders are in profit and when traders are losing money. And that's kind of where the basis of contextual analysis comes from. So the buyers who entered right here are in profit. Even up here, even though there's multiple wicks up here, we're still in profit. So what is retail traders going to do, right? What are retail traders going to do here? If I go to a 1 minute chart, you'll see that there was pretty aggressive buying volume, and retail traders are going to enter up here. So now you have new retail traders who have entered the market long, and smarter traders who have entered the market long at 15,000. So now that we have buying pressure, what you want to see from buyers is you want to see a continued move to the upside, potentially to 1 hour supply. So if the market continues to move higher, then us buyers will be in profit, and the sellers who went short all in this area are going to be underwater. However, because sellers were so strong today, they defended this 1540 area. You can see that acted as support here. We tried getting above it, we failed as resistance. We tried again and we failed. Yeah, sorry about me blowing my nose and coughing. Not much I can do about it. But the main thing to realize here, and this is where the highest probability trade came here, when we realized that we were making lower lows, we made a low here, or we were making lower highs. We had our first high right here. We had a lower high here. When we put in another lower high here and buyers failed to get above and sellers took control, this was a perfect opportunity for sellers who missed this initial move down to re-enter the market. Okay, so there are still viewers, which is good. You guys can hear me, right? I just want to make sure. If one person could say that they can hear me or something, then I'll continue. Okay. So now you have to think about it from a perspective of buyers and sellers. So now the buyers who went long here and we failed to get above the previous high, these buyers, as we start to move lower, immediately are underwater, right? All of the retail who went long here, they are now down in their position. So this just confirms that if you are looking for a potential area to get short, you have to think about, okay, where are buyers going to stop out? Where does risk to reward make sense? So does chasing the move down here make sense? It doesn't, because we are very, very extended. Buyers will have to take control at some point. So now that buyers had the opportunity to take us higher, this is the main thing, in my opinion, which made me enter the market here. If you think about it, buyers had the opportunity to move us higher. You know, we had a critical level, retail entered, smarter traders entered. So now we have buyers which are factored in. But now that these buyers failed to get above the high, these buyers are now underwater, and they had the opportunity to take us higher. So this, in my opinion, is a perfect entry to get short. I'll show you my exact entry on a 1 minute. I do not like averaging in, and I don't think I ever will again. But as soon as I saw this wick right here, it was very, very aggressive if you were watching price. We tried getting above the high and we immediately failed. I entered right here at 11.26. I went very, very small. I went 3 contracts here. And then as soon as we tried pushing above and I saw sellers take control again, I entered another 2 contracts. So I don't really think re-entering is my style. If I entered here, I knew I should have only risked, I knew I would have put my stop maybe at like 1550. But the main thing is that now we have clear selling pressure. So now I have 5 contracts total, and now the buyers who entered here are now underwater as we move lower. So all I do is I simply just continue to scale out my position. So I scale maybe like, I think I scale like 3 before 15,000 because it could have acted as support. But look what happens when we breach 15,000. So we breach 15,000. Buyers try to take us higher, but now this 15,000 level acts as resistance. So acted as resistance 3 times. And now that sellers have completely taken control on the day, they will not give up 15,000. Sellers have officially won the battle. They overtook 15,000, so 15,000 will act as resistance. So every time we fail to get above 15,000, it just gave me more confirmation to stay in my position, right? Why would I exit my position when I'm in money? It doesn't make sense. I have to stick to the plan I had. If I exited my entire position right here, then my risk to reward would have been 1 to 1, and it just wouldn't have made sense. So as soon as I saw, our second push below low of day, premiums spiked a lot on. So I exited another one here, and then as we had this last push here, I exited right here, just because we were very, very extended at this point. We could have bounced at any time. I only had one contract left. In hindsight, I should have held till the final target, but I was pretty happy with my profits. So this was a complete breakdown of contextual analysis. It is very, very different. You do not learn this from any course or, in my opinion, any book. This just comes with practice and time. And a lot of this is psychology. I'm very, very interested in psychology, even outside of trading. So just understanding psychology of humans, understanding where buyers and sellers are placed, will be able to help you put on these high probability contextual trades. Okay, so I wanted to play same day expiration, but for some reason IB would not let me play same day expiration. I don't know what the issue was. I think it's something with post margin deficit. So the contracts I played were they expired tomorrow, so next day. Even though they weren't same day expirations, the contracts still moved extremely well. I mean, over 100% on the last contract. So does anybody have any other questions of any of the 2 trades I took? And for those wondering if I'm still going to trade breakouts, I'm most definitely still going to trade breakouts. But you have to also keep in mind that breakouts statistically have an 80% chance of failing, right? A lot of retail traders trade breakouts. So I only want to trade breakouts when every single factor aligns. And because we are entering a range-bound market, the chance that that's going to happen may be very, very low. So I may have to stick to trading a little bit differently in terms of contextual analysis. Scaling into the market, it's not bad. In my opinion, I'm probably going to stop scaling in. I'm just going to enter my full position and have pretty tight risk. And then if I see a potential re-entry, then I will just re-enter again. No, the only way is just through screen time and just understanding buyers and sellers. I learned a lot from Carmine too. Even though I trade mainly like Dylan, I still do keep up with Carmine's trades, and I kind of understand how he trades contextually. Yep. Anyone have any other questions or any other concept that they want me to go into? Also, there was a potential long opportunity here on SPY. The SPY broke this weird supply. You could have entered on this higher low if you're trading contextual analysis, expecting a further move up. However, the main thing which stopped me from doing that is just seeing this supply work out on QQQ right here. So um, knowing we have fresh supply, the chance that we're going to get above it is pretty low unless it's used. So now that the supply is used, market comes up, you have a good chance of getting to this supply. Yeah, I plan on trading live. I'm just sick right now. When I do feel better, then I'll go ahead and trade live. So what's the style? What's the difference between Carmine and Dylan? Carmine understands the market extremely well in terms of contextual analysis, right? So he can enter in places where to most traders it won't make sense and he will still be right just because he has such a good understanding of price and volume and just how buyers and sellers react with each other. Dylan, on the other hand, he mainly likes to trade breakouts. He's super selective with his trades, so I know he hasn't put on a trade like today. But if the market does become range bound, then yes, I do strive for selectivity because I trade mainly like Dylan. But if we do enter a range bound market, then chances are I'm gonna have to switch over to taking some contextual trades, just because I don't want to be taking like one trade every 2 or 3 weeks. Or for a webinar. Yeah, I mean I could do a webinar, but like where we can't talk and ask questions. I mean, I feel like the point of this live stream is so people can ask questions. Um, I use both. When I take contextual trades, I'll use both one and 5 minute to answer. Uh, do you have a way? Not really. I mean, you kind of have to see the move towards that demand zone. If a move is super aggressive towards a supply and demand zone, and price holds in that area but doesn't have follow through. So for example, I'll give you a good example of that. So if you go to I know the supply zone on ES was breached. Um, so say we came to this demand zone, we bounced off of it, but we had a very weak reaction, or we just hung around this area for a bit. That means that the buyers who entered here are not getting rewarded, and therefore there's a good chance we might slice through. So if you don't see an immediate reaction, chances are we might slice through. What time frame? Yeah, 1 and 5 minute. What is your main setup? Uh, do you mean like main screen setup? I can show you that. So it's this. I'll have two equities on the left and right, and then I'll have SPY and Qs on the right, and my two equities are on the left. Did you mainly just study Carl? Not even his trading recaps, just whatever he says in intraday commentary is so useful because he's literally just saying what he thinks out loud. So when he's saying that okay, buyers are not getting rewarded at this level, I mean he's not going to tell you why buyers are not getting rewarded at this level. You have to go and understand okay, why are buyers not getting rewarded? What are sellers doing? So just understanding his words, and his videos do help a lot. Just give you an understanding of where buyers and sellers are focused. And honestly, if you spend 10 extra minutes watching the videos, or just understanding what he says after the market is closed, I mean, it goes a long way. Yeah, it's good that everybody asks questions. So I mean, it's really hard to teach all of this through a course or like videos or anything like this because everything is so subjective in the markets. I mean, the market is literally a place with infinite variables. So everything is so subjective. So two things are not going to always be the same. So for example, I'll try to go through his I've been trading for about I'd say one. So I started back in April or May. That's when I was first introduced to stocks. Traded options around August-ish, and then and then really figured out what I was doing a couple of months ago. So it's been about a year since I traded options. And I know my learning curve was a lot shorter than other people, but that was also because I would stay up to like 4 or 5 a.m. just talking to random traders, and just understanding what people were doing. I'm also pretty young compared to most people, so I had the luxury of being able to study well. Does anyone have like any stocks they want me to go over? I could probably, if people want, I can go over some contextual analysis on SPY today, if enough people want. Yeah, so if people want, can go over review SPY. Let me go to no, my bad. Let me go to charting. Is it a good time to get ARC bounce for long term? I can look at ARC. I do not have any long term positions, or I don't even swing anything. But just looking at a chart from a glance, you have some pretty important support at like 113. I'd probably wait to see how we react in this 113 to 112 area. If we do bounce from there, could look good for longer term position. Use a VIX. Yeah, I do use a VIX. Don't use it as much as I should, but um, I kind of just use VIX for context as well. For example, VIX had this major trend line which we breached. So when we breached this trend line, did this major trend line right here, I'll show it to you on the weekly time frame. Once we breach this trend line and hold above it, that's when I know there's going to be a lot of fear and panic in the market. Oh, intraday. Looks pretty weak. Unless there's demand, I can check if there's demand. Honestly, because the market is just, oh, we do have demand right here. Honestly, just because the market is so weak right now, in my opinion, I personally don't think that long positions, at least for today, um, would be the move. Is this recorded? Yeah. All of my live streams and videos are always recorded on my YouTube. Okay, I'm gonna go ahead and go over SPY too, because a lot of learning lessons. Didn't see a potential trade here, but so what do you call it? So SPY's was a lot stronger than Q's. Had this push up. I know Carmine got in on SPY right here as we pulled back, but because Q's had that 1 hour supply, it didn't make sense in my opinion to go long. So SPY was a lot stronger than Q's. It was holding value from 9:30 to 11 or even 11:30. On the other hand, Q's was getting straight killed. So from 9:30 to 11:30, Q's was a lot weaker. So if I were to go short on something, I going short on Q's makes sense because it is weaker. However, when Q's broke below 15,000 and held below, SPY was also going to head lower, and that's pretty much what happened. Reached this demand zone, held lower, now consolidating. Now we could go either way. What would you consider as illiquid options? Can you give me an example of? Yeah, I mean, below 1K, I probably would avoid. I also don't trade too many names out of my main watch list here. I will add a couple of names here and there, um, PLTR, UPST, AMC, but most of the times the names I trade are pretty liquid. Okay, anyways, yeah, back to SPY. A couple of other things, at least for contextual analysis. um, this is probably a good thing to write down. So for contextual analysis, there's a couple of things you want to consider. What's happening left on the chart? So essentially, what's the higher time frame doing? Right now, the higher time frame is telling me that we are pretty weak. Sellers are factored in. So unless we bounce from this demand, chances are we're going to head lower. The next thing I do on an intraday time frame is I'm going to ask myself, okay, who's getting rewarded? This game, the stock market is literally buyers versus sellers. So who's getting rewarded? Who's in profit? Who's making money? Who's feeling pain? Who's stopping out? So ask yourself, what are buyers doing? What are sellers doing? Next thing would probably be, okay, risk to reward. Am I chasing here? Does it make sense? For example, here I know the market is bearish, but does it really make sense to enter right below 15K? Does it really make sense to enter as we breach low of day when breakouts have a lower chance of working out? So these are all minor questions you have to ask yourself. Is it extended? For example, the market is pretty weak right now, but not only do we have demand, but we're down 400 points on the future itself. So does it make sense to go short when we're already down 400 points? Does it make sense to go long, knowing that we're so weak? So it's just minor questions like this, like you have to ask yourself. Have you noticed that most? Yeah, I have noticed that. I personally don't understand why that happens, but yeah, I have seen that happen a lot. For me, it's more of a coincidence. I don't really see any psychology or candle structure behind it, so I wouldn't take a trade based off of it, but I do notice that a lot. So the more you start to ask yourself um, questions about psychology, the better you'll be able to put on contextual trades. And another thing I've noticed is with contextual analysis, the trades are probably going to work out right away. So yes, for Qs, for my QQQ trade, I wasn't paying for like 2 minutes. I was down for like 2 minutes, but I mean, besides that, this trade worked out almost right away. I probably am gonna end the video pretty soon. If people have any other last minute questions they want me to go over, I can go ahead and do that. If not, I'll probably go and end the video. I hope you guys learned something, either psychology wise, contextual wise. If you did, please subscribe if you're not already subscribed. Like the video. Definitely looking to trade live once I start feeling better too. Yeah. So maybe maybe I'm gonna end the video now, just concluding the last couple of points. I still am gonna trade breakouts, most definitely, but I will be open to trade some contextual trades just because we may be entering a range bound market. Next thing is I'm still going to be trading very, very selectively. Selectivity and what do you call it? Selectivity and consistency is something I definitely do not want to give up just because I'm adding something else to my toolbox. And then lastly, really spend a couple of extra minutes, whether it's watching live streams or videos or something like that, because essentially trading is just trading against other people, right? The reason why I'm able to trade so successfully now is because I spent those couple of extra minutes talking to Dylan and Carmine, just understanding psychology of people and also understanding the psychology of my trades themselves. So that really helps a lot. All right, I'm gonna end it here. Yeah, hopefully I will feel better. If you have any questions, just hit me up on Discord. I'm active pretty much 24/7, so that's also that. Okay, right now it's a very weird spot. I'm kind of leaning towards puts now, just because buyers have not shown themselves for the last 2 or 3 weeks. But as always, never have a bias. I literally just play whatever the market gives me. All right. Thank you guys. Take care. Hit me up on Discord or YouTube if you have any questions, and I'm gonna head out now.